Hello, before we start today's video, just a quick note that if you are interested in purchasing this indicator, just simply email us at daytradinggps@gmail.com to request a discount promo code. In return for you taking your time for watching this video today, you can email us and request a discount promo code that will give you a substantial discount on the purchase of the indicator. All of our indicators are sold on a one payment for lifetime access basis. Thank you. One more thing before we get started, you'll see in the description of the video there will be this section here, which is click on this link for descriptions links to the other videos mentioned in this preview on different topics about the SPX indicator. So this is a Google Drive link. I'll show you where it takes you to now. So when you click on that link for the Google Drive, this is where it takes you to, which as you'll see is a list of different topics and links to the videos on the specific topics. These topics go into more detail. We may reference some of these topics very briefly in today's video, but when we reference to go look at the video that provides more details, then you'll just simply click on this link and go to here, and then you'll be able to click on the link that you want to see a more detailed video on a certain topic. Thank you. Hello, in today's video we'll be taking a look at the Monday, November 24, 2025 trading session for the SPX index. We'll be utilizing the SPX Daily Key Levels indicator by Day Trading GPS, specifically the V2.0 version of the indicator, which was released a few weeks ago. Okay, so some of you may be already familiar with how this indicator works, but for those that are not familiar with this indicator, this particular video is going to be a lot shorter and a lot more condensed than our typical video. And we have made a new video which outlines exactly how this indicator works, what all the different levels mean, and runs through the indicator in greater detail. And you can find the link to that particular video in the description of this video. So if you're new to the channel or you've never seen a video on this indicator before, then I would invite you to take a look at that video, and then you can come back and watch this one as well. So as far as today's session, we're just going to jump right into the trades for today's session and run through those. So we have the 9:30 a.m. opening candle that crosses above and closes above today's SPX bull bear key price level. So this is the all-important bull bear key price level. It's the important bull bear pivot for this session that the indicator's given. And what this means is the bias for the initial part of the session. So the bias is based on the 9:30 a.m. candle close, whether that is above or below the bull bear KPL level. And in today's session, the opening candle closes above the bull bear key price level, so that is a bullish entry signal for taking that 9:30 a.m. candle trade. Now the bias can change later on in the session. If we start getting closes below the bull bear key price level, then our bias session can turn bearish, especially if we start getting consecutive closes below the bull bear KPL and also start closing below the pre-market low, the PML level. However, in this case, in today's session, we have a bullish entry signal as the opening 9:30 a.m. candle closes above the bull bear key price level. So that is our bullish entry signal for taking a trade on this opening candle. And our standard stop loss on this trade is going to be the first midpoint below the level we're taking the trade from, in this case the bull bear KPL level. And our tight stop loss, if you prefer to use a tight stop loss, is the QL level below the BBKPL level here. It's recommended with this indicator that you use the standard stop loss. That is the recommended stop loss. That's why it's called the standard stop loss. It's going to be a lot less prone to getting stopped out, and we saw that play out in today's session where the tight stop loss did get stopped out here on this candle, but we did have a consecutive close back above, with succeeding candles also closing back above the bull bear KPL again. So if you did get stopped out, you could have re-entered here in this range here again, and also you could have also entered on this particular candle as well if you did not enter on these candles, as these were also within the acceptable range for a trade off of the bull bear key price level. Okay, so there's two different types of trades that you can do with this particular indicator. One is a scalp only trade and the other is a regular trade. And depending on what type of trade you're looking to do, dictates where the target exit is going to be. So with scalp only trades, you're looking for only a one level move in your favor. In this case, this is the level that we're taking the trade from. It's a bullish trade, so a one level move in our favor is the next main level up, and the main levels on this particular indicator are the bull bear key price level and the R1 through R6 levels above and the S1 through S6 levels below. So the first main key level above the bull bear key price level is the R1 level on a bullish trade, so that is your target exit on a scalp. We also have the data boxes here from Thinkorswim for the different trades. Here are the call option entries on the 9:30 a.m. candle. There are three different strikes that you can use on any given bullish or bearish trade from any of the main levels with this indicator. The at the money call option closest to the bull bear key price level is your standard option play with this particular strategy. And for today, since this price was 66.3986, then the at the money standard play is the 66.40 call option, as SPX trades in 5-point strike increments: 66.40, 66.45, 66.35, etc. So the closest one is the 66.40. The price on the candle close here, as you can see on this 9:30 a.m. 2-minute chart, which is the recommended time frame for using this indicator, was $30.30. The first out of the money strike for this indicator for this particular trade, you simply look in the direction that you're taking the trade in this case bullish. You go to the first midpoint above the level you're taking the trade from, and that is this mid BBKPLR1 66.5348, and so that would be the 66.55 call option is the closest strike to that. The price on the 9:30 a.m. candle close was $21. The furthest out of the money strike that you can use on this particular trade from the bull bear KPL level is the level that is one full level away, in this case the R1 66.6709. The closest strike to that, the 66.65 call option. The price on the 9:30 a.m. candle close, keep in mind 2-minute chart, 9:30 a.m. candle closes at 9:32 a.m. since we're on a 2-minute chart. So that price is $16 on the close of the candle. We're waiting for the close of the candle so we can confirm the bias. The candle can travel up and down and cross over intra-candle, but the most important aspect is where is it closing, above or below. If instead we had a close below, then we'd be looking at puts instead of calls on this 9:30 a.m. opening candle trade. Okay, so at 9:34 a.m. it hits our scalp only exit, a one level move in our favor. One level from the bull bear KPL direction we're trading, one full level up is the R1. 100% closeout on scalps only, so there's no adjustment, there's no scaling out, it's just 100% closeout of however many contracts you're trading. So if you're just trading one call option, two call options, 5, 10, 20, 40, or in some cases we have some traders that trade 100 lots. So In this case, the 66.40 call option is $39.20. As you can see, we have the data boxes here. These are the bid prices on the close, $39.20. That's an $890 profit per option. The out of the money 66.55 was $28.60. That is a $760 profit per option. The 66.65, which was the furthest out of the money option on this particular play, was $22.40. That is a $640 profit per option. Now, excuse me, if you were staying in this trade for a regular trade and not a scalp, if you were doing a scalp, now you're free to do another trade, whether that trade is from the bull bear key price level or from one of the other main levels. However, if you're not doing a scalp and you're looking for the minimum 1.5 level move on a regular trade, that is the strategy with the syndicator on regular trades, a 1.5 level move in your favor, then you reach that at 10:40 a.m. when it hit the mid R1 R2 level, which is 1.5 levels above where we took the bullish trade from. So here are the data boxes for those. These are the bid prices. 66.40 call option, 45.50, that's $1,520 profit per option. 66.55 call option was $33.20, and the 66.65 call option was $25.70. So on the 66.40, again, we had 45.50, that's $1,520 profit per option. The 66.55, $33.20, that's $1,220 profit per option. The 66.65, $25.70, $970 profit per option. At this point, you are either closing out all of your contracts on the regular trade, or you're doing a stop loss adjustment to break even, or break even plus a profit buffer, or if you're trading multiple contracts, you're selling 70 to 90% of those contracts here for the full closeout price, and then you are adjusting your stop loss to break even, or break even plus a profit buffer on any remaining runners that you have after selling 70 to 90% of the contracts that you have. Another option you have here is to keep all your contracts and instead not sell any of them and just adjust your stop loss to either break even or break even plus a profit buffer, and then at the next level move in your favor, you have the same decision. Then you could close out 100% or further adjust your stop loss, or scale out and adjust your remaining contracts after scaling out 70 to 90%, and then doing the stop loss adjustment on your remaining runners. At 11:08 a.m. on this candle here, it hits the R2 level. The R2 level is a 2-level move away from where we started our trade, the bull bear key price level, and that is what's known as the ideal 2-level move for a regular trade. What that means is that in 80% or so of the SPX sessions that you'll see, the 250 to 255 SPX sessions per year, in a normal environment for SPX, on a normal year, about 80% of the sessions, a 2-level move is going to be the extent of most moves on your trades. So that is going to be your trigger for, if we are in a low to medium or normal volatility environment, to close out your trades, because in most cases 2-level move is going to be the extent of your trades in 80% of the sessions. However, that doesn't mean that you have to do that, because in a lot of sessions sometimes you'll have things happen, news will come out, your trades can get extended further, and what starts out as a normal day can turn into a day which we have very big extended moves. So those happen. It's just that you need to be cognizant of the fact that once it does hit a two-level move, you need to be more cognizant of the fact that if you are going to have remaining contracts that stay in, and you're looking for a move up to more succeeding levels in your favor to extract more profit, you just need to be aware of the fact that once it hits the two-level ideal move, that you need to start tightening up your stop losses for any further moves. Okay, so when it hits the 1108 candle here on the candle close, we have those up here. So the 6640, 5820, that's a $2,790 profit per option. The 6655 was 4420 on the bid on the close, so that is a $2,320 profit per option. The 6665 furthest out of the money, 3540, that's $1,940 profit per option. So again, as I mentioned earlier in the video, if you'd like to see a video on how this indicator works, what all the different levels mean, and other aspects of the indicator, we've made a new video that goes over all of that, so we can make our session videos a lot shorter and not have to repeat how the indicator works in every single session. Also, you can watch previous SPX session videos in which we go into more detail about how the indicator works, and we have a few of those in the description of this video as well if you'd like to see some previous sessions. But we also made a new video today which just specifically goes over the topic of how the indicator works and what all the different levels mean. So we are going to be putting that in our session video descriptions from now on, so we can make our videos a lot more concise and condensed than they have been in the past. Okay, thank you for watching this video today. If you like the video, please hit the like button, as it helps us with our YouTube algorithm. Also, if you'd like to subscribe to the channel, please do that as well, and you'll be notified of any new videos that we come out with. We're also going to start making more videos on our other indicators, our stocks ETFs daily key levels indicator, our Forex cryptocurrencies daily key levels indicator, and our futures daily key levels indicator. And then we also have another index indicator for trading index options, and that is our NDX daily key levels indicator, and that is for trading index options on the NASDAQ index. So there's a lot of money to be made in that. The NASDAQ, of course, trades at a lot higher price than the SPX, so those options are a lot more expensive, but you also get a lot bigger moves as well with those options as well. Also, as we mentioned in the preview of this video, if you are interested in purchasing this indicator in return for you taking your valuable time to watch this video today, you can email us at daytradinggps@gmail.com, and you can request a discount promo code and we will send you one for a substantial discount on the purchase of this indicator. So again, thank you for taking the time to watch this video today, and we wish you much prosperity in your future trading.